Small businesses are pretty much the lifeblood of our economy, right? But lately, they've been facing this silent crisis. Their financial lifeline is being squeezed like never before. So today, we're going to unpack why this is happening and what it really means for all of us. Let's dive in.
Okay, so we're talking about small and medium-sized enterprises, or SMEs. They're the backbone of everything. But just think about what they've been through since 2020. First, the pandemic, then soaring inflation, and right after that, a sudden crisis where affordable cash just vanished.
And that leads us to this really crucial question. What happens when the very cost of money, the thing you need to survive and grow, becomes a crisis in itself? What does that actually mean for the businesses on the ground? Let's dig in.
To really get this, you have to understand that two huge economic forces basically slammed into each other, creating what you could only call a perfect storm for these businesses.
So it all kicked off with that massive surge in inflation. And this was just brutal for smaller businesses. Why? Well, unlike some giant corporation, they can't just jack up their prices to cover costs without losing all their customers. So their profits, they just got wiped out.
And then, to fight that inflation, central banks basically slammed on the emergency brakes. They jacked up interest rates, and they did it fast and hard. This sent a whole second shockwave ripping through the economy. And listen, we're not talking about a small tweak here. The OECD, which has been tracking this stuff for years, called the jump in financing costs unprecedented. That's a word experts do not use lightly. It means this was completely and totally off the charts.
So what did that actually look like on the ground? How did this storm hit the #1 lifeline for pretty much every small business out there, a simple bank loan?
Well, the cost of borrowing just exploded. Take a look at this. In 2022, the typical interest rate for SMEs shot up by 1.1 percentage points. Now, to put that in perspective, during the huge 2008 financial crisis, the jump was only about a third of that. This was nearly 3 times more severe.
But it wasn't just about the price tag. Here's the other massive hurdle. Banks got nervous. They started demanding more collateral, more of your assets as security, which made it even harder for a business to even qualify for a loan in the first place.
And the result of all that? Just look at this number from the UK. In a single year, the loan rejection rate for small businesses soared by 30 percentage points. The door to getting cash was basically slammed shut in their faces. So, with the door to a traditional bank loan pretty much closed, where else could businesses possibly turn? They had to scramble for cash, looking for literally any alternative they could find just to stay afloat.
But yeah, there were no easy answers there either. The world of alternative finance was a really mixed bag. For instance, venture capital, the money that fuels new startups, it just dried up. But at the same time, something called factoring, which is basically selling your unpaid invoices for quick cash, it actually grew as companies got more and more desperate.
And this part is absolutely crucial to understand. Who got hit the hardest? This downturn in venture capital wasn't felt equally. Women-led and minority-owned businesses who already have a tougher time getting funding were hit disproportionately hard. It just made a terrible situation even worse.
And remember, these are not just numbers on a chart. This kind of financial pressure has real, painful consequences for businesses, for their employees, and frankly, for the entire economy.
And here it is, the ultimate sign of that distress. After being kept kind of artificially low by all that pandemic support, SME bankruptcy rates really started to climb in 2022. The pressure just became way too much for many to handle. So what was behind this spike? Well, it was a few things hitting all at once. Courts were back open after the pandemic for one, but the real drivers were those crushing borrowing costs and the rising prices for materials and energy. For so many businesses, the math just didn't work anymore.
But the challenges don't actually stop there. While all these SMEs were just trying to survive, another massive financial need was looming on the horizon: funding the transition to a green economy.
And this brings us to this idea of sustainable finance. It's basically money that's aimed specifically at green projects. This is absolutely essential if we're going to build a net zero future. And guess what? Small businesses are key players in making that happen.
But, and there's always a but, here's the catch. SMEs are now facing a whole new wall of obstacles. They really struggle with all the complex data reporting that's required. They're often not even aware of the green funding that's available, and on top of it all, investors can see them as being too risky. Which leaves us with a final, really critical question.
We absolutely need small businesses to help lead this green transition. But after the financial storm they've just been through, and with all these new hurdles in front of them, will they actually be able to get the funding they need to do it? The answer to that question is going to define our future.